Bitcoin startups are starting to attract some real cash, even as industry leaders are warning about the potential for abuse. Welcome to Digits. I'm Simon Constable. And here we have Wall Street Journal Deputy Corporate Bureau Chief Spencer Ontay on the set to tell us all about this.
Hi.
Thanks for being here. Bitcoin, we've heard a lot about it, and now there are Bitcoin startups attracting cash. Tell us about that.
Right. So this is what is the great thing about covering technology. Things come out of left field sometimes, and all of a sudden, it can turn into the next big thing. And so what came out of left field in the last few months is this thing called Bitcoin, which is this virtual currency, which is created by this mysterious person in 2009 that nobody knows really too much about. And it's been growing over the last few years. And so now it's attracting the attention of venture capital investors who invest in high-risk ventures. And so we reported exclusively that Union Square Ventures is probably the biggest venture capital firm in New York, is leading an investment round of $5 million into this new startup called Coinbase.
And that's where you can keep your Bitcoins that you've mined or you've paid for or whatever.
Yes.
And so you've got the safe place to keep them.
You can go onto the service and you can buy and sell Bitcoin. You can put it in your digital wallet, and then you can transact with merchants who accept Bitcoin.
Okay, so this is taking off. This is the broad theme that this Bitcoin thing, not only it's the Bitcoin company, but also all these other startups.
The ecosystem.
The ecosystem is growing just like the Apple ecosystem grew, but there are some real risks here, aren't there? And the risks are for abuse and hacking. Explain why.
Huge risks. So, you know, it's a currency that's not backed by any central bank. So that's the first thing you have to understand. Most currencies are backed by governments.
And some people would say that was actually a good thing, but carry on.
Yes, and that's part of the reason why it's catching on is because people look around in the world and they see central banks across the world pumping money into these economies, deflating the value of the currencies. Look at what happened in Cyprus. You know, the money you had in the bank really wasn't even worth anything. And so the risk is that people can attack some of these exchanges, okay? And this happened a few months ago where there's an internet denial of service attack on Mt. Gox, which is this Bitcoin exchange based in Japan. It's the largest exchange. And what they said in their press release is that they attack the website and then people can't buy and sell, right? Because the site goes down. And so people panic, naturally. And then they start doing panic selling, okay? And the price of the Bitcoin plummets. And then the attackers accumulate Bitcoin. And then once they get it on the cheap, you know, then they stop their attacks, and then a natural market reappears, and then the price starts rising. And so this is part of the thing we're beginning to see with some of these Bitcoin exchanges.
And this is an unregulated part of the market here. That you would think would be a real sort of thing that would make people want to shy away from it, but still people are piling into this. I've got friends who've got small businesses saying, hey, I'm going to make it so you can pay with Bitcoins now.
Yeah, so one of the interesting facts about Bitcoin is that the person who created it put a cap on the number of Bitcoins at 21 million Bitcoins, right? And 11 million of them have been distributed so far. So part of the theory of the investment Bitcoin strategy is that it's a limited supply, and as demand grows, it will naturally lead to an increase in the price of this unit of currency. And so that's what some people are betting. Other people are thinking it could turn into a legitimate payment mechanism because if you use a credit card, there's a transaction fee of 2.5% to 3%. And so part of the theory is that this will spread around the world because merchants will adopt it since they're very low margin businesses, a lot of these retail establishments, and then they could basically make some more money by accepting Bitcoin.
And you mentioned that the company that created this has put a limit on the number of coins. That is only their promise, and they could presumably turn around and change that at some point in the future. So you have no guarantees from that, even if you trust them.
Well, that is a big question. The way the system was architected, as I understand it, is that it is capped at 21 million, but who's to say that's going to happen? You know, is there a contract that you sign that they will have to honor? No, there's no contract. It's just the way the software was created. And so I think that is definitely a risk factor. In fact, when we talked to Fred Wilson, who is one of the investors at Union Square Ventures, about this, he said, if I was to write a prospectus listing all the risk factors on this, it would be very long disclosure. And so it's, you know, people should definitely tread carefully here.
Okay.
But there's a lot of excitement.
A lot of excitement, but tread carefully. Spencer
Yeah.
Onte of the Wall Street Journal. I'm Simon Constable, and that was Digits.